Welcome, everybody. We made it through the weekend after a nasty historic Friday, and we have a new guest with us today, G Dinero. I call him G Money. I hope that's okay. G Money. G Dinero.
I like it.
Yeah. And
thank you. Welcome.
You're a lifelong trader like me, so welcome to the crew. And we have CTO and Marty, and we have a lot to cover today. The big theme is, can we ever trust crypto again? Is it safe to step back in? And how do we play it safe? Where do we play it safe? And exactly what happened? And we'll talk about a bunch more stuff as well. But before we jump in, Marty, alive and well?
Good morning, everybody.
Yeah, all good.
Nice to meet you, G. How are you guys doing? Everyone good?
Yeah.
Doing well. Yeah, thank you, Marty. It's nice to meet you. Nice to meet CTO and James. Thanks for having me on. I really appreciate it.
Oh, our pleasure. And don't forget, links for everybody's channels are below, and everybody can be streaming everywhere they want, so you'll see us all. But don't forget to follow these legends. CTO, you made it through the weekend unscathed.
I did.
Of course. I
did okay. So yeah, congrats to everyone who made it through the weekend, I guess, because it's been I think I've never seen so many stories on X of people. Many people wrote it before as a joke, but this time it was real. So a lot of people who got completely wiped out, they thought it could never happen, that even if they were on like 1.8x leverage or something, there's no way it can go down like that. But it did, and it did in minutes and wiped a lot of accounts out.
Yeah. In fact, I broke down a lot of the numbers on Saturday, and I was stunned to see 10.3 billion of the 19 billion all happened on Hyperliquid. And rumors are the API for Binance has been toggled with, so we're not even seeing the full extent of the actual damage. Marty, is that true?
Yeah, I mean, I understand that Hyperliquid uses all DEXs, including Hyperliquid, which is obviously a blockchain designed specifically as a DEX per platform, use Oracle networks. I mean, if people aren't aware, the prices come out of centralized exchanges, opaque exchanges, into these Oracle networks, which carry the dollar pricing. Remember, blockchains don't have any notion of dollar pricing. They price everything in crypto. So dollar pricing, the thing that we are so fixated on, the dollar price of crypto, and the thing that we bet on, right, when we go long or short, all come out of these centralized exchanges through these APIs into these Oracle networks, and they blindly distribute them throughout the whole ecosystem. So all of the positions you're opening are based on Oracle data. Everything is calculated on Oracle data, including Hyperliquid, which do a weighted Oracle price feed. And Binance is the highest rating, number 3. So, it's all connected through these Oracle networks. So if a centralized exchange like Binance transmits a price of 0 for Bitcoin into the Chainlink and Pyth network, that will distribute throughout crypto, liquidate everybody, and then instantly can restore back to where it was. And I think this is sort of what happened. Whether it was a glitch, it was intentional, it was an attack, it was much like the 1980 stock market glitch that caused the market to tank. These price feeds are the biggest risk in crypto. They have nothing to do with crypto. They are complete separate closed loop, centralized data feeds. Got violated. Binance had their explanation. Other people have theses, but at the end of the day, Hyperliquid was also really hurt. And obviously the attack vectors are coming. Was it an intentional attempt by Binance to take down Hyperliquid? Was it actually a Binance software flaw from their update? Was it other malicious actors outside of the network like Wintermute, which obviously we saw deposited 700 million in Bitcoin, Ethereum, and Solana right before the crash? Was it their typical shenanigans? We don't know. But the problem is the prices for those moments, even though they weren't those prices, were distributed through the network. All the positions are liquidated down to 1.75x, and everything restored back to normal. So, it seems like the 2017, 2020 style attack of the cross collateral positions, because they know that because of ETF generic guidelines coming out, there's going to be, massive inflows into crypto. We're going to go up, and they can't carry the longs. They got to remove them because they're liable to carry those longs in perpetuity. So, they used the strategic attack around that Trump narrative to flushed the market, which I've been telling you they've been doing forever. So there you go.
And
I think the wicks were lower than they've ever seen, James. I
Yep.
think that they really lost control for a second, and that'll come out of the laundry. What exactly happened? Why did the wicks go so low?
Yeah, exactly. So I was trying to pinpoint exactly what happened, and it's pretty clear. Excessive leverage 1, market manipulation 2, Oracle failures 3, and then CoinGlass was hacked at the same time. I mean, when you have confluence across these 4 different things all happening, it looks and smells like manipulation to me. Gee, what do you think?
Yeah, no, the same thing. Like we were kind of discussing a little bit ahead of time. I've never seen the price action go above and below what should have been the price, meaning the oracles are firing data all over the place. And as Marty said, I mean, I agree with him wholeheartedly that the price that we're thinking about is in dollar terminology. That's what we've placed our bets in as far as these leveraged bets that were placed. And when you can't get accurate data, then nobody knows what is the correct floor. What are the correct liquidation levels? I know, Marty had posted some liquidation levels on his X channel, and I was looking at those and then looking and trying to compare them to Glassnode, and it wasn't. They weren't even CoinGlass, and it wasn't even close. I mean, it was just changing so incredibly rapidly. If you looked on CoinGlass, there was no liquidity where they went to according to what was being shown. So just a lot of discrepancies in the data field. Fortunately, as a lot of us talked about, there were many that survived through this. I know people that had liquidation prices and that wicked down supposedly well below their liquidation prices, and they didn't get liquidated. So it just shows you the pricing data itself was what was inaccurate. Not structurally something different.
Absolutely. For example, the price of SUI on Coinbase never dropped below 2, but it went to 0.56 on Binance. So there were Oracle price discrepancies like we've never seen before. And I think that is the root cause. Something happened on the Oracle networks.
And going back to that real quick, it all seemed to be centered around Binance. Notice it was 3 in particular, 3 pairs that they said were going to be down for maintenance and reprice or whatever it was they were doing. It was going to happen during that exact time frame. That those 3 were the ones that started firing data that was just incredibly inaccurate.
Now remember, guys, here on the DCA show, I believe it was October 4th. That was a week before the event. I posted and I told you there was $19 billion of long interest down to 106,000. Do you remember that?
I do.
Okay. There were 19.1 billion liquidations. That kind of coincidence doesn't happen. They needed to remove that 19 billion of longs, and they did. However they did it, we probably will never know. But they did it. And to me, that is criminal. Anyway.
It was wild how much some things fell. I think Cosmos Atom is the symbol, went to 0. Don't trade it, never traded it, but it was wild. CTO, what's your perspective on all of this madness?
Yeah, so it's very interesting. So if I can share the screen.
Also, before you jump in, there was huge discrepancy as well between the actual exchanges. I know Kraken went below 100,000 on Bitcoin, whereas Coinbase only fell to 107,000 on Bitcoin. So maybe you can look at some of the wicks.
Absolutely. So many altcoins look like this. This is, not some small random dead project. This is SUI. And from 2.8 here to 0.5.
Yep.
So this is what I mean, that many people thought that, if they were on 1.5x leverage or something, it can never go that low. But it dropped.
Yeah, that was 1.75x leverage. Liquidation was 0.6.
Yeah, so here it dropped 83%, Atom dropped 100%, many dropped 50, 60, 70, 80, 90, 95%, and then right back. So how is this even possible? And I think that one interesting post that I have seen, I haven't fact-checked everything, but from what I know, it seems right from this guy, Elon Trades. Interesting here. So what's interesting is that the Bitcoin sell-off started before the Trump news. And everyone said that how TA couldn't predict Trump. Yeah, but there was weakness before. There was weakness already on the Thursday. There was weakness on Tuesday already. So there was something going on. And I was quite concerned there already on the Thursday. Then this happened. Then, okay, Trump posts about the tariff, Chinese, the sell-off accelerates, and the market continues bleeding, Bitcoin down. And then exactly what you were talking about here, that assets used as collateral, especially on Binance, started depegging. So USD stablecoin depeg from $1 to 0.65. This ETH derivative drops 90%. This SOL derivative plunges to $0.13. So then the collateral that people have for their positions are suddenly not worth much, right? So you had a lot of collateral. There's no way I can get it liquidated because I have this much collateral. I have only this much position. But suddenly your big collateral is worth nothing in this
supposed stable coin.
So at the same time, the value of the altcoins are also crashing. So collateral is collapsing. The value of the altcoins is also dropping. And this then cascades and accelerates and cascades and accelerates. And then this liquidation engine, that means like if you're broke, you don't have enough positions anymore. The exchange will start selling your stuff. They will take whatever is left, sell it, because that's, the rule of the game. If you go below this level, they're going to sell your stuff. So their liquidation engine kicks into overdrive for selling all this stuff, Bitcoin, Ethereum, stablecoin, altcoins, whatever it is. And other exchanges also, the hedges unwind and it spreads, and the total liquidation is back past 19 billion. So it's like a chain of events that seemed impossible until it actually happened. And I think that is what we're seeing then in all these charts. And I mean, we talked about Atom before. I have it here somewhere. You see it went to zero here. So, and then right back again. So this is, I think, what has happened is like a combination of perhaps some intentional play from some large players here, unfortunate events, and Oracle pricing data that wasn't handled in the right way, and all these different factors together enabled this. And it wasn't, I don't think, this is not caused by Trump's tariff statements. There were tariff statements in April that were much worse than this. It's like you kind of use those news to put some more fire on put some more fuel on the fire.
Exactly, and that's what they do. They wait for somebody to ignite a match, and then they pour a ton of gasoline on it to drive the prices down further. And that's how they play the game. They wait for those moments, and they pile onto them and make it a lot worse. But on this topic, actually, Run It Back is the name of the show. Today, Trump is preparing to meet Xi in Korea, north or south, I'm not sure. But that's supposedly back on. And apparently, rumor has it from Kobeisi that it was a Google Translate lost in translation. When the Chinese read Trump's tweet, they said, "Oh, that's insulting to us. Boom, let's fight this." And apparently it was all a misunderstanding through social networks. I don't know how true that is, but it's wild. And we've been around long enough to know that when these dips happen, you just jump on. You can't be fearful, and that's why you always need to have some cash. But the other thing as well, I want to before we wrap up on the manipulation, if we look back historically, there's a cool little chart from Merlin. But look at the dip in early October last year. It looks like a pattern that's repeatable, perhaps. And then, nothing fundamentally has changed in the space. A lot of people or at the stage now of throwing in the towel? Gee, would you recommend people throw in the towel at this stage of the game? Or is this the worst time to do it?
That's exactly what they want you to do. They want you to capitulate at the bottom. Marty said something that I want to make sure everybody caught, and that was the flush. In order for things to go up, they have to wash out that leverage first, or else they're on the hook for it. So, I mean, and the other thing, as you guys were talking, something I was sitting there thinking about, there were winners too. Somebody picked up Adam for pennies on the dollar whenever somebody else got liquidated out of it, right? So you've got to think that the market makers put new spot, whether it's Bitcoin that was the collateral, ETH, whatever the collateral was, they put new spot into their coffers that now they can now go resell to people back up at the prices they should have been at. So short answer, James, no, people shouldn't capitulate right here. I mean, this flush happened so that we can go higher over the long run, in my opinion.
Well, let's unpack that, because there were people that were leveraged short, and they didn't even get to close out their positions. So again, the market makers, especially on Hyperliquid, were doing some very shady stuff. Marty, did you look into that?
Yeah, no, I know a lot of people in short positions that their positions are automatically closed with all kinds of strange error messages. This nobody got left out here. Everybody got screwed in perps, long and short in this case.
Except for those that were just in spot.
Yeah, I agree with Gary. I mean, I picked up Sui at $1.10. You know, while it was flying down there, those that have been in this before in 2017 and 2020, we know that those are life-changing opportunities. We know that the price is disconnected from the blockchains and it'll all recover. It's just a glitch in the system, whether it's intentional or not. But, you know, those people that didn't have stop losses, I think that's the saddest, because if they did have stop losses, they could have entered at the bottom and made their money back, or partially. But at the end of the day, it's true. They can't carry these longs. It's a business. So they had to remove them. They found a way. Trump gave them the perfect narrative. They did it, and now that opens up new all-time highs, guys. Now we can go up.
So let's just wrap this one up, because we all kicked it to death for the last, over the weekend at least. Do we all believe it was a targeted manipulation, or no, it's just a fragile system that needs more controls, checks, and balances? Marty, you first.
I believe this is a 100% market structure missing. I mean, this is what we've been going. This is the Gary Gensler effect. This shouldn't have been allowed. These centralized exchanges have so much control and power over the pricing of crypto, you know, $4 trillion asset class, and they have no surveillance, no regulation, no guidelines. Like, I even had an argument with someone from Chainlink. I said to them, okay, so you just take the price from Binance de facto. Do you audit it? If they send you a price of Bitcoin 0, do you care? Or you just communicate it to your network? You know, there are no checks and balances with regards to the Oracle dissemination of the pricing. And it affects everything, the entire industry. And so, yes, I think this is a huge wake-up call for Paul Atkins and Caroline Pham, that market structure is not an option. It's not something we might have. We need it urgently. We need to eliminate this manipulation from our asset class.
Okay, so Marty, full-on manipulation. Gary,
full on.
You agree?
I totally agree. It's when you have so many inaccuracies just all across the board, you can't just take it at, like Marty said, at face value, whatever Binance says. What if it wasn't Binance? What if it was, you know, one of the others? You've got to have some kind of actual underlying structure that can withstand some kind of attack like this at the end of the day.
Yeah. Okay. CTO, over to you. Manipulation or not? You might be muted. Yeah.
Muted.
Apologies. Yeah, I think it was manipulation. I think there were large players on the exchanges. I'm not so sure it's an exchanges as such. I think it's hard to distinguish sometimes. I think large players playing the game extremely well with large amounts of money, and they played to win, and they did it quite well. If I can just add one other thing also, which was completely new to me, because I have some friends who were actually correctly positioned. They had shorted into this. and on Hyperliquid. And they got their positions closed with this auto deleveraging, they call it.
Auto deleveraging, correct.
Yeah, so basically means longs and shorts have to be balanced. And there was not many people who wanted to long at some point here. So instead then of going in and taking the opposite position with some market maker of funds, they started closing the other positions instead. They closed the positions for people who were short.
Yeah.
And,
so then basically you're saying, well, I was suspicious anyway about Aster, but Hyperliquid is also shady AF. Don't touch him.
I mean, my conclusion from that was, now I did not short into this, so I didn't sit there and wait for a lot of money to roll in, but I have close friends who did. They had correctly identified the weakness, they did short into it, and they did it in Hyperliquid, and they got their positions closed. And I mean, no problem, but yeah, what's the point then? Like, when you actually nail a situation like this where there's life-changing money to be made because you actually shorted into the biggest dump we've ever seen in many altcoins and a huge dump in Bitcoin, and then the freaking exchange closes your position because there is no one who wants to long it. Okay, but I mean, what's the point of the whole thing then?
Exactly. Yeah. So that's what
I kind of lost a little bit the confidence, I must say. I don't think I'm gonna open important positions there, and I would guess, I don't know if it's the same with other similar exchanges like Aster, but I think a lot of people had never heard about this. I had never heard about it either. I know these people didn't know this could even happen, and yeah, I got less interested in using them myself. That's
it. So I just want to say that I did try using Hyperliquid. I hated the experience. I tried to use Aster. I hated the experience, but I have historically perped things like Hype and Aster on Drift. Drift held up really well during this crash. So did Jupiter. No problems with either. No problems adding collateral. No problems doubling down, stuff like that. It was very impressive. But the other ones I wasn't on, thank goodness, because that just scares me. It's a question. The big question. We're trying to get to the heart of this issue for the audience. Okay, we all agree it's manipulated and it's orchestrated very heavily all across the board. Can we trust these platforms again? A lot of people got badly kicked in the teeth. They said, I'm done with crypto forever. I'm going to stick with options trading on stocks, which is kind of a much safer game in my opinion. CTO, quick yes or no. Credibility, is it gone for some of these platforms?
I think high leverage trading altcoins, I think that has taken a big hit for sure. But crypto as such, I don't think is hurt at all. In fact, many of the decentralized exchanges worked much better than the centralized exchanges. At least they've stayed away from the perp exchanges we just mentioned.
Yeah. G, credibility?
Yeah, I don't trust things like Hyperliquid or Aster when you can, with that ADL, the whole automatic deleveraging. I mean, I don't know, you showed the post, but the gentleman or gal that said that one, you do everything right and they just close your position, you can't win. I mean, the deck is it's like going into the casino thinking that the casino doesn't hold the cards, so to speak.
Yeah, it's definitely shady. Marty, hit it. Can you trust?
Yeah, I mean, you nailed it. These are casinos, people. They have the same morals and ethics as any other casino. This isn't math. They're businesses. They will always protect themselves first. The ADL is meant to protect Hyperliquid, and they protected themselves at the expense of their clients. They'll also use sort of narratives to deflect, like, oh, Binance try to take us down. But at the end of the day, you're 100% right. You can't rely on these things. It's not like these are not regulated markets. They're completely unregulated. They can do whatever they want. So at the end of the day, degens will be degens. They'll continue to trade. What I like what you said, James. To me, the big takeaway is this was once again a truly remarkable test of the blockchains. They held up beautifully. Solana hit, I think it was 6,000 real TPS for a while. Not a single problem. Jupiter, I got in long on Sol, almost at the very bottom during that chaos. No problem. I think once again, crypto wins, actually. And all eyes will be pointed at the centralized dollar-based sexes, which once again they are the single point of failure. That's the point. Blockchain was invented to remove single points of failure. Centralized exchanges are the single points of failure. It happened with FTX. It's now happened with Binance. What's next? We've got to get rid of them or regulate them.
So the question is, how do we fix this? The next question, if I'm thinking, I would, like we saw again, I was stunned at crypto.com and Kraken, the $7,000 delta in price with Coinbase. Normally Coinbase is the suckiest one of all, with big swings, you know, away from where the market's at. But Kraken and crypto.com were wild. Bitstamp was okay. Some of them were just way out of whack. And as you say, Marty, there's thousands of these exchanges all over the place. Was it their fault or was it Oracle's fault? But the big picture I'm trying to get to now as well, can this result in change that makes the place better for everybody? Is there a way of maybe having some type of AI solution, keeping these DEXs and SEXs, centralized exchanges, honest? I see you nodding there, Gary. What do you think? Is there a way around this?
I mean, it is long, but it all depends on who's programming the AI at the end of the day, too, because if you can keep the human interaction out in certain places where somebody wants to be very manipulative for their own gain, so to speak, then yes, the AI could help. But on the flip side, if AI is the one that's turning around and being programmed by somebody who is manipulative so that it works to their advantage, then I would say no.
Yeah.
Good answer.
All right. Let's get back to more fun stuff to show that maybe there is some hope out there. We had some big news come out of Dubai. And as you know, the Middle East is trying to pivot to a couple of different things. They happen to be crypto and AI, coincidentally. But this came out from the Prime Minister of UAE, United Arab Emirates, just said Bitcoin and crypto is now a new sector for its economy. And by the way, so is AI adjacent. So when you see extremely wealthy countries pivoting to crypto and AI, what does that tell you? CTO, what do you read from this? Because I think it's very exciting.
Oh, yeah, I mean, absolutely. It's nothing new. It's what we've said for a very long time. And it's the new up-and-coming countries all the time that are ahead here too. And then many of the legacy countries are trying to delay, hesitating, debating new regulation and so on. And the only exception really is the US, who are pushing ahead. All other Western countries, almost without exception, are trying to slow it down and so on. And then we see all these countries who have done incredibly well over the past couple of decades, always in the front, always pushing ahead. And I think it's exactly like disruptive transition. We're seeing that play out in front of our eyes. This is exactly what it looks like. The people who were very comfortable in the old setup, they try to stop it, but can't stop technology. You can at best delay it a little bit. So yeah, it's gonna shift the power of the financial centers into new places, and that includes Dubai for sure. We already see it.
Exactly. In fact, the US just lifted a restriction on sending NVIDIA GPU chips to the Middle East. Now they have them. So the AI wars are on, and the amount of compute that the Middle East has today is just shy of the amount of compute that Europe has, which is mind-blowing to think about. How positive is this, Marty, for you, oil money heading into Bitcoin?
I mean, the UAE is extremely bullish on crypto. They have been for a while. I think they have 75% of 25 to 34-year-olds invest in crypto. It's not legal tender yet, but it is completely legal. You have Solana Breakpoint is in Abu Dhabi. Dubai is very crypto friendly. And this is meant to happen. And yes, I like your take. I think they are very wealthy. They have massive sovereign wealth funds which invest in technology a lot. And there is obviously always been speculation that they would make large investments in crypto, and I think it's just a matter of time. So I like the UAE, and I like the way they've done things. They have a very, very good Securities and Commodities Authority and a central bank, and I think they're coming.
Yeah, and Gary, and we noticed as well, price of oil fell below $60. So they need to pivot.
Think about it. We ran on a gold standard back in the day. Then that moved to a petrodollar. And now I think they're saying, okay, do I want to swap my oil for dollars anymore? Or do I want to swap my oil for something like Bitcoin that can't be inflated and basically demonizing the oil price. I mean, so I see it as a natural progression. They don't want to sell it for dollars anymore. They'll sell it for Bitcoin instead.
Yeah, and that's funny because I have a little slide on that, and I did mention in the video over the weekend that fiat is toast, and a lot of people made some funny memes of this. So be careful what you say on the internet because memes will pop up instantaneously. So a big thank you to everybody who made these memes. But this takes us to the debasement trade. Now, it's related to the pivot that Dubai is making, but you just mentioned hard assets. So I'm jumping all over the place of the agenda here, ladies and gentlemen. This is so important. Fiat is toast. Everybody's looking for hard assets. We're moving to a hard asset economy, and this is a profound time. Gold is about to hit $4,100. People thought 4,000 would be the top. It keeps on going because you have the early stackers, Russia, China, and now the rest of the world, India, etc., are jumping into the gold trade. Even retail investors in the US, they think, I need to move my portfolio to Bitcoin and gold. Weird. CTO, what do you make of the gold trade right now?
I thought perhaps it would top there last week.
You have a chart on it?
4,000, and here we go. It's mind-blowing.
Every 2 days a new all-time high. I've never seen anything like it. Straight up.
It is incredible. Look at the candle today, guys.
Yeah. So the question
on the daily chart, when was the last time the trend turned down? If you could just back out for just a second.
Yeah, so it hasn't been down since it broke out, like both on daily, and we see it maybe easier on the weekly chart. But the big breakout was here at 2060, I think I had it at, and that was in beginning of last year in 2024. And this was really a generational breakout that I think not many people noticed for some reason, even though it was so easy and clear here in the chart. And it really ran up since then. So this was really the start of this run when people, big players buying to get the world's biggest asset to break out of its resistance. So this started already then, guys. There's been big players buying since then.
I mean, the point to be made, CTO, is that, in my opinion, my humble opinion, Bitcoin would look like gold. The chart would be the same if it didn't have unregulated markets. I mean, COMEX and the CFTC, they're regulated exchanges. Gold is a highly regulated exchange. Every exchange is regulated to the highest degree since, I believe, 1934. And if in Bitcoin would look the same, it would be the same chart if they didn't have the ability to flush the longs. I mean, people are longing gold and shorting gold just as much, but they're not allowed to manipulate. I believe gold, that chart of gold, the Bitcoin chart, would be the same.
Yeah, the ratio of paper gold to actual gold at one stage was 100x. So just that's how much leverage there is in the gold system.
Exactly. So what we see here is that Bitcoin has gained on gold all up until the last basically 2-3 months, where this is Bitcoin price divided by gold price, and you see that it has approached this ascending triangle with higher lows. It's only now the last couple of months that it kind of started going the wrong way, and it's a little bit surprising. Like, what is happening here during these periods? Why is Bitcoin lagging gold like this? So what we're feeling, this pain that we're all feeling, that gold is drastically outperforming Bitcoin. It's only this little bit. So this, of course, if it turns around, if this breaks out here on the upside, okay, that's a generational breakout in the relationship between Bitcoin and gold. Then this could shoot up massively. And then we have a new world order, basically, where Bitcoin is really the new gold for real.
Yeah, in fact, if you go back 5 years, a lot of people are upset. Oh, I should have been in gold instead of Bitcoin. But if you go back 5 years exactly, Bitcoin's up 7.4x and gold is up 1.3x. And gold is at its biggest rally in its life in 50 years. So it is an unprecedented time for gold. But remember as well, people buying gold have money printers. So they can throw literally hundreds of billions at this thing and grab it all. Now, there will come a time, because unless history is different this time, that Bitcoin will catch up to gold. The question is it 30 days before Bitcoin makes a new all-time high, or a 100-day lag? That's the question. What do you guys think? Marty, 100 days or 30 days, or never?
I mean, I think the strategic Bitcoin reserve narrative from the US government will pretty much dictate that. If they make any positive news about that, I think you'll see a massive turnaround in that chart.
Yeah.
I think it's the credibility of the US government at this point. We all know that China is heavily investing in gold. BRICS, BRICS wants to make a gold-backed currency to compete with the dollar. And so clearly they are the major buyer of gold. But once again, I go back to my statement. I think that if you remove the unregulated behavior in the crypto market, Bitcoin's chart would look like that.
Yeah, so I'll challenge you on that one, Marty, because I believe, gold has a Lindy effect of 5,000 years. Bitcoin has a Lindy effect of 15 years. How are these nation states going to trust something that's only 15 years old? It's like it's a nanosecond of relative time. I think that's what's keeping them out. But I do believe it'll be front run by the forward thinkers, like we mentioned, places like United Arab Emirates and other countries that see the writing on the wall, and they understand it's a better gold 2.0 Bitcoin.
One announcement from Scott Bessent about strategic Bitcoin reserve, one senatorial congressional vote, one statement from Donald Trump, and I think the whole world will change in their understanding of what Bitcoin is meant to be for.
Gary, is the SBR a pipe dream, or do you believe it'll happen?
I do believe it'll happen. I think it'll happen. I think it's just a matter of time. But I think also take a step back, look from a bigger macro perspective for a moment here. We are likely going into we are in arguably an inflationary environment. It bottomed out back in 2020, and in 2021, they started increasing the interest rates. The interest rates started going up from there. Gold and Bitcoin, not one or the other. So this is just going back to your debasement trade right here. Gold and Bitcoin will rally in a market like that, where inflation is the underlying tone. Now, I also know from, James, being around you long enough, being around everybody else, it's funny, Larry Lepard and I's picture just came up as I was saying that, because I'm thinking in the big print, stocks don't always do as well in that environment. So you have this weird dichotomy where you have these AI stocks coming into play, which I know is part of the agenda later. You have these AI stocks coming in, making the world deflationary by nature, making things, they should be less expensive, but we have this fiat system that is inflationary by nature. And those two things are going like this, which I believe at the end of the day is going to cause gold and Bitcoin to go up together. So yeah, there's probably a bit of a lag. And I do believe Bitcoin has its day coming. And I also agree that you had to get rid of the shenanigans first. You got to get rid of some of that crazy leverage first in order to go up. So big, long answer for, I don't. For the debasement trade being gold and Bitcoin, true stores of value that cannot be inflated.
Yeah. And there's another concern too that I have is if you are moving millions, tens of millions, billions around, and you see some of the crazy, how do you call it, unstableness or lack of stability for things like Bitcoin with this Bitcoin Core version 30 concerns, CTO, as a technologist, is this nonsense? Or would this rattle traditional investors?
I mean, there is an element of concern here, because this was widely debated if people were here in 2017. Like, should Bitcoin be changed or not? On one side, they said that we should keep up with Moore's law. We should make it cheaper, faster, better by increasing the block size, and thereby be able to fit more transactions into each block, and each transaction will be cheaper, and we can use it for payments and things like that. And then there was the other side who said that no, Bitcoin should be like gold. It should never change. It just is there, and it's like unchangeable. We should only correct security risks or actual errors.
Yeah.
Exactly. Not add stuff, not add features. It should just be like a gold brick. You don't change the atoms in the gold. They stay the same. Excuse me. So that was the debate, and there were arguments on both sides, and there was like a huge war going on there. And then in the end became like, okay, we should not change it. Now we're here, and now there are changes to it after all, which is then the concern is basically that to increase this op return means that it's possible to increase the non-monetary data that's in the network. And the concern then is that, okay, you need more bandwidth, you need more storage. Perhaps that could lead to centralization, which was the argument against increasing the block size. And now kind of doing it anyway. And then there's arguments like, no, it's fine. It's going to be fine. There's no problem. This is all fine. And then there's some people saying, no, it's not fine. It's risky, and so on and so forth. So I'm not entirely in favor of doing these kind of changes, which is a little bit hard to overlook. I think it need to make up our mind. Like, is it digital gold? Okay, then maybe we don't put too much non-monetary data into the network. Or we try to keep it, modern and improving. Let's reduce the cost. Let's increase the capacity. Let's make sure we can use it for payment, all that stuff, and
make it quantum proof.
Make it future proof better.
Yeah.
Use it to include the other data and so on and so forth. And like halfway, I'm not so convinced about. Now, probably it's all fine. Like, I can't really overlook it. Probably it's fine. But this is the debate that's going on. And some people are very upset about this. Some other people say it's fine.
Yeah. I think when the OGs from Bitcoin, like the Adam Backs of the world, etc., start coming out and being vocal, Samson Mao, etc., then something is up. Marty, thoughts also as a technologist?
Yeah, I think the core version 30 upgrade involves a lot of other enhancements people don't talk about, which are very good. There are enhancements in networking. I think there are mempool policy changes, mining, there's enhancements, the RPC network enhancements, all kinds of system behavior. The real issue, the problem is that proposal for the op return, like CTO says. And the problem is, once again, like he said, is Bitcoin a store of value, or is it trying to be an execution layer? And that whole op return was introduced in 2014. Remember, it's only 80 bytes. So yes, you could put a ZK rollup in there. So you could potentially do what Ethereum is doing with layer 2s and have, large sort of zip files of transactions stored in that op return. And then Bitcoin would automatically sort of be the same as Ethereum is now with the layer 2s. It would be a layer 1 for potentially any other layer 2 network with ZK rollups. So this op return thing is really, people kind of questioning the future use of Bitcoin. Is it a store of value, financially focused, or can it hold arbitrary data in this op return field? And we saw things like runes, ordinals all jump in and use that op return output. But at the end of the day, it goes down to sort of a philosophical argument. And the beauty of open source is that, it doesn't matter. They have to come to consensus as to what to change, and it'll be by majority, and they will do it with governance, and we'll see what will happen. But ultimately, there is a lot of changes in version 30 that are vital. Very good.
This is like talking religion or politics. There's going to be people on both sides, and you're never going to win. But the day, what really scares me is fork. I do not want a fork to happen. I hope the adults in the room can figure the best path out for the asset. That's my only concern. Which takes us to our next topic that people want to know. And we try grab the sentiment for what's on people's minds. JP Morgan comes out and tells clients to buy Friday's stock market dip. On Monday, buy the dip. Now, this touches both crypto. Like, I think the buy the dip term actually came from the crypto world. Now it's being embraced by TradFi, which is hilarious. And we're seeing convergence of crypto and TradFi. And as I always stress, you need to play both if you want to maximize your alpha. But the question I want to take from this, though, is how do you guys determine how and when and at what levels to buy the dip? Very important. Sorry, I forgot to take that comment off. Sorry, CTO, there for a second. Let's start with you, Marty, first, real quick. How do you know when the bottom's in?
I mean, I'm a liquidation level trader, so I believe that the market, specifically crypto and novel asset classes, are controlled by the perpetual market. And so, I've kind of just watched patterns from watching charts for so long. I use the 50% pullback on the 1 or the 4 hour as my ultimate entry for the big dip. And that's just basically understanding when to mute the primary market maker's control over the market.
Yeah.
But I mean, it's a very good question, James. When do you buy the dip?
We had an Omega candle, unfortunately, in the wrong way. A $23,000 candle on Friday. $23,000 in 6
hours. That's a dip. That's a dip, James. That's a dip.
that's a massive dip. But the old expression we had in TradFi years ago is catching a falling knife.
That was the dip to buy. Friday was the dip of the cycle, 100%.
But we were only down there for seconds as well, so you have to be very fast. I remember it was like between 2 and 3 p.m. here, and I was on a special machine and turned everything else off and just lucky. But these things happen for moments. They're not long duration events.
That's the point. Like, you want to buy the dip, but what if you can't buy the dip because the exchanges give you a message that they're down due to volatility, like they did, right?
Or your money's in your bank.
You can buy the dip is the question.
Yeah, exactly. So I always stress as well, having the ops in place to make sure you always have liquid cash on hand. What I mean by liquid cash on hand, you press one button, it's there within 5 seconds. That's very important. Gary, how do you buy the dip? How do you find the bottom?
First of all, thank you for not calling on me on the technology side of things. That stuff, honestly, I'm not in it for the technology. I'm in it for the money. So I'll just be blunt. Second of all, all I could think of as you guys are saying this is BTFD or whatever that program was. I know that's not what the program was called, but I'm just calling it that. I've seen this a lot. I mean, I've been in the markets for 35 years. So I've been doing this since I was 15 years old. And it's having a limit order in place. If you see things starting to go and using solid support and resistance levels, CTO, I know you're big time a technical analyst. Marty, you're big time a liquidation levels guy for your levels. And James, you and I are kind of, I would say, more Fibonacci related, because I know that's where things like Lilo and ATR are pulling some of their data from. We're all kind of saying the same thing. Having an idea in your head, if this pulled back, what's the worst case scenario? Where could it pull back to? And just leave some cash on the sidelines there. You have to have cash at all times. And people will disagree with me on that till the cows come home. But if you don't have cash, when the market dips, like you said, James, you got to have it liquid. What are you going to do? You're going to just sit there and miss it like every single other one. And that comes from taking profits when the market spikes. Don't be afraid to take profits. So the last thing I'll say about all that, you got to take the emotions out of it. Yeah. Because when things are flying high, all you can think of is how much higher they're going to go. And when things have dipped and are in the toilet, all you can think about is how much lower it can go. That's fear and worry and anxiety and excitement all wrapped up into one. Smooth that out. Be ready for when those things come by taking some profits at the top, and you'll always have some cash to be able to take advantage of them. And
it's also important to have a limit in your head. So, for example, I said to myself, I hadn't bought Tesla like since 330, and then watched it go to 475, and then watch it mean revert. And I said, you know what? At 400, I'm a buyer. We didn't quite get there on Friday. So I said, you know what? It looks like it's bottoming here at 411. And that's where I went in. And now it's 426. So it never went back down there again. So that was actually the bottom during the market. CTO, what do you do?
Yeah, so I think that one other reason, I forgot to say that earlier when you asked if it was, I think it was manipulated or just some mishap. I think the timing really added to the thesis that it's manipulated. So
yes.
UTC time, the big dip was at 9 p.m. UTC time. So that's maybe 11 p.m. on Friday night in large part of Europe. And in Singapore or Hong Kong, this is 5 a.m.
Yeah.
5 a.m. after Friday night. So a lot of people will not exactly be sitting at the screen, if I put it mildly. So you have filtered out the entire, at least European, Asian regulated markets that are open bank hours. They are closed. You have filtered out a large part of the European and Asian traders because they're asleep or drunk or both.
Yeah, exactly.
So, then it's easier to do stuff because there's no one doing what the guys just talked about. Like, how do you buy the dip? You don't want anyone to buy the dip if you're trying to crash it, right? Because then it's harder to crash it. It becomes more expensive. So you want everyone to just not do anything while you're crashing the price. So I think that's another reason why it was. But otherwise, it's exactly like that. Like you said, the G here, like if you buy support and sell resistance instead of the other way around, you've come a long way, Yeah. And that sounds so obvious when you say it, and everyone knows that, and everyone knows, trend is your friend, all that stuff. But when it actually happens and you're sitting there and it's like, should I buy now? But it's crashing. It will obviously go lower at peak, worry. But that is the bottom. And I have a friend who said this, that everyone's a gangster until it's time to place buy orders on support, and then you're not so tough anymore.
Exactly.
And I think that's a great line, actually. It's not easy to buy when it's crashing, even if it goes to support. And it's not easy to do what you said, G, there, to sell at resistance or whatever model you have, because at that time it feels like it's obviously going to go up more, and you feel like you usually feels like it. You usually, at least I usually feel like an idiot. Whether I'm buying or selling, I feel like, okay, but
everyone
really
does.
Dumb
Everyone
now.
does.
If I'm buying, it's obviously going to go lower. If I'm selling, it's like, actually, why am I selling? You can't go on emotion here. You need some kind of system or logic or something.
Process. Yeah. And that's why the reptile brain takes over, and you need to overcome the reptile brain, because when you see a $23,000 candle going the wrong way, everybody thinks that's the end. Everybody's like changing their underwear and stuff like that. And that's exactly what Gary said about the nerves, the emotions. They completely take over. So with that conversation about kind of crypto and stocks, we have this thing called Prestocks on Solana, which has a lot of people very, very excited. They think, I can get into XAI, and I can get into SpaceX, and I can get into Anduril and OpenAI all before everybody else, before it gets released. And a lot of people need to be very, very careful here. I have got my sentiments on why they're dangerous, but Marty, over to you first. Prestocks on Solana, good, bad, or ugly?
I actually have them coming on to do an interview on the space. But just to be clear for the audience, what are Prestocks? They're basically just derived tokens. The word token means a artifact that represents something else, that represent exposure to pre-IPO private companies, like you mentioned, SpaceX, OpenAI, Anthropic, Discord, Kraken, Epic Games. I mean, there's many of them coming out. And I think it's pretty cool. But once again, I mean, I wouldn't put my entire nest egg into it. I think when you're getting pre-market exposure, you want to be very cautious as to your allocation, allocate conservatively. But they're apparently fully backed. I mean, I'll get more information when I talk to them. Apparently, they're fully backed 1-to-1 with these SPV vehicles. and
Yeah,
reference companies eagerly.
that's where it gets really shady, and that's what I'm trying to dig into for a few months now, because it does sound sexy and exciting. But we just discussed how Oracle pricing gets messed up. Do you think these things track the true price? No, because the true price for
absolutely. I mean, you get no legal
rights.
rights, James. You're right. Holders
Exactly.
is purely economic exposure. You have no ownership, no voting, no dividends, nothing. I mean, just have the right.
There's a redeemability risk. You don't know exactly what you're going to get and at what price. There's lots of uncertainties. You don't know what the counterparty risk is, or even an asset there. So these things are exciting, but also be very careful out there. Play a little bit. You might be able to get a pump on SpaceX if Starship is successful flying later today. You'll see the pre-stock price maybe go up a little bit, and then take it off, and then put it back on a slump. Gary, what do you make of all this madness?
So you've got a friend on another stream that you do named Tesla Boomer Mama. I guess I'm Crypto Boomer Papa, because to me, I look at those things and I'm like, yeah, no. Only because of what you just said at the very end there. Okay, if you're going to do it and play it like you're in a casino and you're going to bet on something, a quick pump because of Starlink launching from right there. Normally the other rockets launch from right down the street from where I live here in Florida. Wow. But I wouldn't go beyond that. If it pumps, take the money off. And it's the hardest thing to do, guys, because if you get in and something goes up, let's say 50 or 100%, and all of a sudden you start thinking about where it's going to go, it's going to 10x from here. It's going to go up 1,000%. It won't. It'll come crashing right back down again. Get in, get out, play it like a game, and do it with less than 1% of your portfolio.
Exactly. Well said, Gary. And what I like to tell people is, this is your casino. Okay, you throw like $10, $100, $1,000 on something. If you make money, you use that money. Take it off immediately. Use it to build your bag in a stronger asset all the time. CTO, what do you make of this?
I don't know, actually. I'm very interested in this. It's been one of my biggest frustrations these past couple of years in stocks, that previously many companies IPO'd earlier. So it was possible to just go to if you had like an early technology insight, you realize, oh, wow, this could really become something. You could just go and buy the stock. Usually you can't now. The VCs and the angel investors and so on, they keep the stocks much longer. When it finally IPOs, it's basically their exit. And it's late to buy the stock already. Of course, there's exceptions, but in many cases, it is like that. They want to hold on longer for the run before it lists public. So I'm very interested in different ways to get exposure to technology companies before they are on the stock market. But I don't know enough about this pre-stocks to really understand how it works, if the valuation is correct, or if you could get stuck with these tokens and they're actually not worth anything. Or I want to understand more. I'll probably listen to Marty, your stream.
It is super interesting. I'm excited for the future where it's completely decentralized. And imagine being in a position where everything's tokenized, you get a democratization of all assets, and then you can perp trade them. That's my dream. And it's a perverse dream, not financial advice, but that day is coming. We'll be able to perp this stuff before IPOs and beat out.
I just take an example. Remember, James, you and I, we talked about XAI so much years ago, and then okay, how to buy it. I can't really buy it. I would have loved to have something like that. Whatever valuation it was the first time we talked about it, I have no idea how much it is now, but it will be up 20x, 30x, 50x, whatever since then.
Yeah, exactly. It's, you get in early, and the problem is the big money always gets in early. The big VCs, the big hedge funds, and the multi-billionaires, the Larry Ellisons, we're always last to get to the table. And that day, hopefully, crypto will bring about change in that regard. And I think it's very positive. A little bit of breaking news, too, from Curb. The Sol ETF, of course, we know is delayed on Friday. Maybe that was part of the kick in the teeth. Apparently, Thursday, 10/16. Marty, 16. You know anything about this?
Yeah, well, actually, Grayscale's deadline was on Saturday, the 11th, for their conversion, but the 16th is 21 shares and Bitwise. Yeah, that's the big one.
So you think the government shutdown will still continue to slow this down, or is there a shot?
I don't believe so. According to the SEC's own page, they are slowed down. They have minimal staff, but they are still processing, just slowly. So
Okay.
we could see approval, 100%.
Great.
We'll probably see it in the market first, guys. We'll see it in the market first.
Final topic. I always talk about this, and sometimes it alarms people, so it'd be good to get perspective.
I love this, James. I love this page.
Yeah, chances of assets going to zero.
Dollar to 100% chance.
The dollar is on a slow grind going to zero, but it might take another 40 years or 10 years. I don't know. Something's going to break. S&P 500 going to zero. I'll go through my thoughts first, and then I'll have you all chime in. I believe 60% of the S&P 500 companies will be completely obliterated over the next 5 years because of AI. They're walking zombies. Gold, and it's been around 5,000 years. It's not going anywhere. Bitcoin, we talked about the Bitcoin core versus knots. That is a danger. A double spend is a danger. Quantum in about 3 to 5 years could be a danger. We don't know. There's always risk of something going to zero. And at least have 1% in your mind. So you should never have all your eggs in one basket. Tesla, could it go to zero? Everything can go to zero, but their position is dominant. And even if the whole management team changed, I still think they'll be very successful, just like Apple was for many, many years after the loss of Steve Jobs. And Solana, I believe technology is evolving so fast, we don't know what the future looks like. We don't know if a new layer 1 is being developed by a 12-year-old in his basement right now that could wipe everything clear. We don't know. So there are my thoughts. Marty, you like this one. So
I like it because to me, that's interesting. If the US dollar did go to zero, what would be the value of all the other things?
To the moon.
Right.
That's the problem. Yeah.
And then, just because something has a value, what if you can't buy and sell it like we saw on Friday? That's another risk. I think the bigger risk is the markets themselves and whether you can actually participate, whether they're technically down, whether they're giving legitimate data, etc. But if we remove all of that manipulation, etc., and say these are all, let's say, decentralized and true and on chain, I think that ultimately the US dollar is going to zero. We're already starting that transition. I think gold will never go to zero. It'll always have some intrinsic value as long as the baby boomers and the forgotten generation are alive. I think gold will trend to be lower as the younger generations inherit the wealth from their grandparents and parents. I think the S&P 500 will probably go through periods of complete flux with automation and AI as companies realize they can make more profits with AI, but they have to fire all their staff. I think that's going to be an interesting vector. Tesla, I think, is established. There's more Teslas on the streets in America right now than I've ever seen. It's going nowhere. And I mean, I think Solana being decentralized and open source, its only risk is the public internet, and it's already building a private internet. I think that it's got a very low chance of going to zero.
Good feedback.
Intrinsic value, remember? Intrinsic value, not market-based.
And I think the huge takeaway here is because of what we've gone through the last 3 days, we saw Atom going to zero, Cosmos, and it's a legacy, probably dead chain or whatever, but it went to zero. And this is what kind of spurred on this kind of question. But you mentioned a very important point, Marty. How do you trade something if there is a danger, and if it is in a death spiral? Can you get out, and what do you swap it for? And I always say everything is a pair, but is there a pair between whatever asset you're in that could be in a downward spiral and to get out quick? That's the danger. And that was the wake-up call we had this weekend. Gary.
Yeah. Couple quick things. One, we're talking about assets going to zero, but priced in what? Priced in fiat. So we're sitting here in our heads talking about priced in fiat. Number one. Number two, this won't be popular, but that's okay. It's not the audience I'm trying to attract. But I noticed you didn't put any poop coins on there because it's pretty much assumed they're all going to zero by default, in my opinion. Number three, everything is a pair, like you said. And I actually did a quick video on gold versus Bitcoin and pair trading those over the last 5 years. And you talk about a return.
Oh, yeah.
Holy smokes. So
Holy smokes.
I believe everything will be underpinned in one of those two. And that's what we'll be measuring in. So will Bitcoin go to zero? Not in Bitcoin terms, if Bitcoin's the new measuring stick. Will gold go to zero? Not in gold terms, if gold is the new measuring stick. The dollar, yep, it's just going to keep bleeding down. It's already lost 97% of its purchasing power since the Fed came out. S&P 500, most of those companies are going to go to zero or get propped up. And if they get propped up, they're propped up by what? US dollars, and US dollars are going to zero anyway. which means by default, those companies are going to zero. Tesla, guys, a lot of people think I'm a Tesla bear because sometimes I beat it up. I'm just a realist. I think that there's going to be a quick pullback before the next massive spike. That's my opinion. James, you kind of agreed, or else you wouldn't have set the hedge at 500, knowing that there was going to be a breather before the next run. But going to zero, no, they have got an incredible moat, and just they're revolutionary. And Solana is the one that I don't think will go to zero because it has such an incredible use case at the end of the day. So whether you measure Solana in dollars, gold, or Bitcoin, it's not going to zero.
Yeah.
Well, the interesting thing as well, like if I can just interject, Gary, Solana currently supports tokenized versions of the US dollar, the S&P 500, and the stocks, gold, Bitcoin, and Tesla. That's its purpose. So it's the internet capital market. But what I thought the interesting thing here is, if the internet goes down, how many of these can you trade?
Yeah. That's
ham radio Bitcoin, right? Supposedly ham radios. I think I saw that once.
Physical gold. I mean, ultimately, you'll go to the store with some physical gold, I guess. It's the only one that was survive without an internet.
It's interesting.
Go ahead.
So CTO, over to you. One of my dreams has always been what I call the petro Bitcoin, basically oil denominated in Bitcoin. I think BRICS will try and make something like that happen soon. It eats them alive that it's denominated in dollars and it's part of the dollar hegemony. What do you think about all of these assets and where are they all going? And how do you denominate them?
The one that I got an increasingly worried for this year is a US dollar. 1 year ago, I would have said very low risk, that not that it goes to zero, but if we kind of modify the questions a little bit, like could the dollar hyperinflate to the point that $1 becomes almost worthless? Could gold drop 99%? Can Solana drop 99%? So it's not zero, but like, it lost almost all its value. So if that's the question, I'm more concerned about the fiat that it could actually end up hyperinflating. I think we talked about Tesla. I think Elon Musk was genuinely worried. Like, if can't get the budget under control now with all this effort, and that president and him there personally, richest person in the world, very good at execution. Even people who hate him have to agree on that. And they still can't do it.
He said it's easier to get to Mars than to fix the government.
Exactly. So, I mean, and the implication of that is not so good. If the debt will just keep skyrocketing faster and faster and faster, how is it going to pay for that? So, I mean, I feel there's a real risk that the fiat, not only US dollar, but many Western currencies could hyperinflate. I don't think the risk is zero. I think it could absolutely happen. I can't quantify the risk, but is it zero risk that will happen? No, I don't think so. I think it could happen. Can the S&P 500 go to zero?
Can I stop you there on CTO? Because you said something very important regarding fiat and debt and everything else, because it's so important. But I saw a crazy statistic this morning that 70% of French GDP is for government payments. Universal basic income benefits for unemployed, and like, that was stunning. And if you look at the United States, which is not as bad, but the national debt is not what you think it is. It's actually 3 or 4 times higher because of the future obligations. And people are living longer. There's no babies. AI is coming. The risk of absolute Armageddon in fiat is extremely high. So there will be huge debasement. And all the stuff that Jerome Powell talks about as a joke, this magical 2% inflation. So I just want to hammer that home for the audience. And while I'm still talking, links below for these legends. Don't forget to follow them. Back to you, CTO. Sorry about that, but it was very important what you said.
It was very, very important and a very good point. I read a statistic just this morning. I haven't fact-checked it. But in 1990 in Sweden, there were 3 people working for each retired person.
Wow.
Today it's 1.8.
And so, it's going to 1 as well.
So and then what's the political will? Which politician is going to come out and say, sorry, we can't pay the old people anymore, we have to cut this and cut that? And it will be so incredibly unpopular that they will never get elected and they can't even stay perhaps in government. So then what's the solution? I would just print more money. That's like the easy answer. So I feel that could happen. If we move on then to S&P 500, now I don't think that I don't think that can happen, because that's the totality of all the companies and all the stocks. I don't think, unless our entire society collapses and then we have like bigger problems than that, guys. So I don't think that can happen. Gold, yeah, I think it can. If we're like putting on black hat now it's like a risk analysis. Could it happen that gold goes down 99%? I think in a generation or two, I think it could happen. I don't think it can happen 2026, guys. No, or 2030. I don't think it can happen. But can it happen over a generation or two? Yeah, I think it can happen, because it's like a collector's item, guys. It's like an NFT. You get these gold bricks and you put them in the vault and you say that I'm really rich now because I have these gold bricks. Okay, but what if people don't want the gold bricks anymore? And then you say, okay, but I can use them for connectors to my hi-fi speakers and the chips. Okay, but how much gold do we need in the world to plate all the chips? And it turns out, okay, we have enough, guys. There is like oversupply of those bricks. We don't need that many. So, price drops 99%. Can that happen? Yeah, I think it could happen. What would be the risk for Bitcoin? The positive case then is that the gold as a collector's item becomes Bitcoin as a collector's item. It's like the digital gold instead in the next generation. If we put on the black hat for Bitcoin instead, what's the risk? Well, I think it's things that we talked about earlier today. What if some of those improvements that is introduced turns out an absolute disaster that no one really could overlook? And there is like chaos. And they have to roll back the whole Bitcoin. And then they will debate for 1 week, should we roll it back or not? It's all chaos. It doesn't work. The freaking code doesn't work. And before anyone says that can ever happen, it can always happen with code. To roll out a new version, it can malfunction in ways that no one possibly could have imagined. So that's the risk there, that it gradually starts losing trust. It has worked really well for a really long time, but what if that starts cracking? That could be the risk then, and then maybe there's some other protocol instead that comes up. Tesla, companies can always Tesla looks really great now, but could things happen over a long time? Of course it can. Same with all the projects. Same with Solana. Maybe there's like another project that takes over. And
the Chinese could cut off rare earth metals for the whole car industry in the world, the robot industry, the actuator, then we're all toast. Yeah, China.
So the point is that, with black hat on, maybe with the exception of S&P 500, there is nothing without risk. But one way to mitigate the risk is to spread it out a little bit over these different assets that we're looking at here. They're all good bets. So, we can all, and then if things start going
south.
Except
for Fiat. Fiat is not a good bet.
Yeah, fiat is not good. But, having some stable coins on short term is good if the market dips.
Yes.
So, that's a good risk reward, at least on the short term in that. So they're all good in different ways in combination. And if things start going south, probably we can spot it. Not always. We just had the example of the weekend, like where things go down in 20 minutes to zero. So, of course, it could happen. But usually if things go south, we can see it. We're going to sit here on Mondays and talk about it for weeks and months before it actually gets really bad, probably. So in that case, we can maneuver.
Great point here from Super Bull. If China cuts everyone off, there will be a large scale war that China will lose badly. Nobody wants war. And the Chinese are some of the most capitalistic people that I know. So they play hardball, but they don't want war. We try to keep this to an hour, everybody. I'll let you guys decide. I got one last topic which dovetails into all of this. You guys have 5 more minutes?
Yes, sir.
Yeah, CTO, 5 more minutes. I know it's late your time. It's dark outside. This question has been on my mind and probably everybody's mind. Okay, so we know AI is coming. We know there's going to be displacement of workers. which would mean everybody will have to go on some type of universal basic income or some type of robot tax. Even government officials are now talking about this across Europe. Europe saying, we're going to do a large pivot to AI right now, and we're going to control it, and we're going to be the best. But little do they know, that's not how it works. Government never has the answer. But this question, again, we'll just do a real rapid fire round here. With the future, say 5 years from now, if there is mass unemployment, everybody's on UBI income, will there be enough money to keep markets inflated? Or will things just be depressed across the board? And what I mean by that, again, displacement of jobs, manual repetitive roles, etc., white collar jobs, everything. There would be no healthy economic systems or markets because nobody has any money. Again, it's a weird paradox. Success in AI and automation reduces the market for their own products and services. Nobody can afford it. Again, real quick, I'll start with you, CTO, first, because you think a lot about era digitalis. Does this screw the pooch for everybody?
I think not for everybody. So some people will get massively richer. A lot of people will get poorer. So this is going to make it more unequal. That's the result. People thinking about how to invest in assets, how to take advantage of this, we will get more leverage. And a lot of people with good jobs today, they're going to be replaced by a $5 per month software subscription. And that's a fact. So I think that will kind of lead to a lot of debate in society. You know, should we tax the rich more and more social fairness, or should we manage it some other way? And I think there will be a lot of conflict around this topic. But society as a whole doesn't necessarily need to get poorer as a sum, but it will definitely be more divided and bigger differences.
Some great comments here as well from the audience. Okay, Gary, and then final word from Marty. Gary, what do you think?
Yeah, mine will be super quick. It's in line with what CTO said. There's going to be, I liken it to the days of kingdoms and serfdom. You know, you're going to have the royalty that the wealthy are going to get uber wealthy, and the others don't necessarily lose per se, but that divide grows so much that it doesn't look pretty to me. It doesn't look pretty. And it could happen very quickly. And then you end up with UBI and everything else as a result of it, because you have people that just can't afford to go buy anything anymore. And it's what will those ultra wealthy that own the AI? See, that's the key. Somebody's going to own the AI. I mean, I guess ultimately the AI could own itself, but I believe it's going to be owned by the uber wealthy. And then it's almost like the rest of us are going to have to ask, how can we get our pittance from that? So that's my take.
Serfdom, haven't heard that word in a while, but I like the analogy. Marty, over to you. Final point, and again, link below for everybody.
Since we started the show, I've always had the same sort of feeling. I think that AI's economic imprint, on markets specifically, first of all, it could reinvent and markets entirely by becoming, the primary trader. That could happen. But anyway, I think it's a dual-edged sword. I've always said that. It is a catalyst for unprecedented growth. We know that. There is no doubt about that. But it's also a vector for disruption. And so we're not quite sure how that will play out. I think I agree with the wealth disparity. I think it's only going to exaggerate and emphasize the rich getting richer. And I think crypto will be, the currency of AI. The machines will use crypto to do what they need to do. So the only words I would give to the audience is, first of all, make sure you're invested in assets. Because if you're not invested in assets, when this happens, I don't think there will be a chance to get into assets. Assets will inflate so fast.
Yes.
So make sure you buy the assets now. When we say buy now, you're early, that's what we mean. We're talking about an AI revolution. But ultimately, I think, what are people going to do? And I think there'll be a return to some form of a renaissance, maybe a resurgence in spirituality, art, things like that. There'll be UBI. Maybe a lot of people will be happier not having to beat the street 9 to 5 and just sit at home doing yoga and playing computer games. So there are optimistic outlooks for people. And I think for the uber rich, absolutely, they can literally redefine what's real. if they own the AI, they can literally tell you what is the reality. AI will become the source of truth, and they control it. So it's an interesting time. I'm glad to be alive through it. But with regards to the markets, I think it's very unknown. I think there'll be spikes, lots of volatility around it.
Yeah, people agree with you, Marty, big time. Again, one point you mentioned, and we've been talking about it, people need to no longer be dependent on their W-2, their salary, their wage, their job. They need to take whatever they have and start investing in assets, because that will be your life raft. And we don't care which form it is, but make sure you have exposure to both AI and crypto. Even after the weekend we had, this crypto stuff is by no means dead. Sometimes people can give up the ghost and get kicked in the teeth and they say, I'm not going to go back to that pub anymore ever again. But you have to get back on the horse after an adverse experience. I want to say one more time, thank you for joining us, Gary. Your links are below.
Yeah, Gary, we love you.
Channel and everything else. Legendary fellow. Thank you, CTO. Always your balanced perspective. We love it. And Marty, all your insights on everything out there and your liquidation levels. Tons of alpha in this show. Appreciate all the words of advice from everybody. Don't forget to follow these guys. And of course, we're streaming all over the place anyway. Thank you as well to the moderators in the chat and everybody for being here.
Thanks,
Take care
for everything you do.
And thanks,
guys. Again, have a strong week. Let's see if we get an ETF approved. Okay.
Yes, for sure. See you all next Monday. Bye, guys.
Peace out.